Now, I'm sure you guys would have heard the news recently about Square announcing their plans to buy Afterpay. Now, this is huge news for the buy now, pay later sector, especially in Australia, and this deal is going to represent the largest acquisition deal for Australia at 39 billion Aussie dollars, or about 29 billion American dollars. Now in this video, we're going to discuss some key facts and figures about the deal. Then we're also going to discuss about the synergies between Square and Afterpay and why these two businesses can work really well together. We're going to look at this from a merchant perspective, which are the sellers. Then we're going to also have a look at this from the consumer perspective as well and see how these two parties get integrated even more. So essentially, we're going to discuss why this deal makes sense. Hey guys, my name is Fyzee and this channel is about finance and investing. Before we begin, as usual, this video is not financial advice. I'm not a financial advisor. Please make sure to do your own research as well. These are just my thoughts and opinions and findings, along with some facts as well. So make sure to take that into account and do some of your own research as well. Let's get into it. So firstly, let's talk about the strategic reasons and the rationale for doing this transaction in the first place. So obviously with Afterpay, they are a growing leader in the buy now, pay later space. They've helped customers to get an alternative payment solution to essentially pay their items in 4 payments instead of using the usual option, which is using credit cards, which can be pretty costly with annual fees and interest. And on the merchant side of things, that has allowed them to grow their business as well, because more and more customers want to use those merchants just because they're offering Afterpay. And Square is basically going to come in and integrate Afterpay into their merchant and consumer ecosystems that already exist. So on the merchant side of things, Square obviously has their EFTPOS machines and their EFTPOS terminals and also the online payment systems as well. And then on the consumer side of things, Square owns Cash App, which basically allows every single American to make transactions using their online digital wallet. So they can basically buy crypto, send each other money, they can invest their money and do some other stuff as well, which is pretty interesting. And Cash App makes this very easy for people to do because every single person gets a cash tag, which is kind of like a username, like a pay ID equivalent to Australia, so people can easily send and receive money. And basically Afterpay is going to get added in to integrate the consumer and merchants even more closely, and we're going to talk about how this looks like later on in the video. So looking at the overall structure for the deal, Afterpay shareholders will receive a fixed exchange ratio of 0.35 shares of Square stock for each Afterpay ordinary share they hold on the record date. What this basically means is that for each Afterpay share that you own, you will be getting 0.375 of Square stock. So as an example, if you own 100 shares of Afterpay, you're going to be getting roughly 37.5 shares of Square. If you own 1,000 shares of Afterpay, you're going to get 375 shares of Square, and so on, just as a very simple example. Now, an interesting thing that Square also announced is that they're looking to list on the ASX as well as a secondary listing and as a CDI, which stands for CHESS Depository Interest. So basically what that means is that if you're holding Afterpay share, you can choose to get Square stock as a CHESS Depository Interest, as a CDI, or as the normal stock which is listed on the New York Stock Exchange, and shareholders can basically choose, which is my understanding. Now when it comes to CDI, personally I'm not too sure of the technicalities of how it actually works, but the way that I understand it is that if a stock is listed on a different exchange in a different country, a CDI is basically an alternative way to buy into the stock. And the benefit for us is that since it's ASX listed, we can basically use any broker that we want to use to buy into the stock and basically get similar benefits. Now, there are some drawbacks of doing this as well, which I'm not too sure about, so make sure to do your own research if you are looking to choose the CDI option. So as you guys can see, based on this announcement, Square is looking to buy Afterpay at a premium. So on Friday, Afterpay shares closed at $96.66, and based on this offer, the implied share price is going to be $126.21, which represents a gain of about 30.6% to Afterpay shareholders, right? So basically, if you increase $96.66 by 30.6%, roughly you'll reach $126.21. So that is basically the gain that Afterpay shareholders are going to be getting in theory. Now, one interesting thing that I found in this whole announcement is to do with tax. So if we have a look here, it says that Afterpay will apply for a ruling from the ATO in relation to the availability of scrip-for-scrip capital gains tax rollover relief in regards to the transaction for Afterpay shareholders in Australia. So they're saying that the stock transaction is intended to be tax-free to Afterpay shareholders in Australia, and receipt of confirmation of such ruling is a condition, blah, blah, blah. So basically what they're saying is that with this transaction, it may be exempt from capital gains tax, right? Because basically those Afterpay shares are going to be converted into Square shares. Now, once again, guys, this is not financial or tax advice. I just thought it was pretty interesting to see this tax part in here. So if you are unsure of what all this means, make sure to get some proper advice, because I'm literally just reading what's on the announcement. Now, if you guys also have a look at the timing and approval section, you can see that the transaction is expected to be finished up in the first quarter of next year, so the first quarter of 2022, because we're still waiting on a lot of admin stuff, and the approval has to be granted from both companies, right? So approval has to come from the shareholders of both Afterpay and Square. Now guys, let's talk about how this whole transaction benefits Afterpay and Square. But before we do, as usual, if you have found any sort of value so far, please leave a like or subscribe. It really helps out with the YouTube algorithm. Let's get into it. So firstly, let's start off with the buy now, pay later sector and Afterpay in general. So at the moment, as you guys can see, there has been $10 trillion worth of online payments, and just about 2% of that is buy now, pay later transactions, right? So we've seen this percentage increasing quite a bit over the last couple of years as the boom of buy now, pay later has happened. So we can safely say that this number is going to slowly continue to grow in the future. Now, this obviously presents a huge opportunity for, to target those millennial and Gen Z target market, because they are the people that are trying to use this Afterpay offering more than kind of the other generations, because this target market has found that they don't want to go down the traditional route of getting a credit card and paying that 20% interest rate, annual fees and whatnot. And if they can just buy what they want to buy, interest free and in 4 easy payments, it's a lot easier and it's a lot better solution for them in some cases. And this buy now, pay later trend is looking to get a growth rate of about 10% year on year through the year of 2024. So of course, it presents a decent opportunity. And looking at some high level benefits of Afterpay that people really love, and I think the main two benefits that stand out to me, and I think if I was to use Afterpay, the benefits that would stand out to me would be, firstly, no external credit checks or reporting to credit bureaus. I think this is pretty big, because when I was working as a mortgage broker, I would always, when I would speak to customers, one of the first questions they would always ask would be, are you going to check my credit report, right? They would be so worried about their credit report, and I think it's pretty fair to, ask those questions. So I think if Afterpay is not doing those credit checks, I think it calms the customer down as well. And secondly, I think the interest-free part is quite a game changer as well, because, whenever people hear interest-free, it's like a bell inside them goes off and immediately they want to gravitate towards those sorts of offerings. Now, interest-free isn't always good, and there's some credit cards out there that advertise themselves as being interest-free, but they also end up charging a kind of like a month-to-month fee. And if you guys want to check out the full extent of those cards, I've done a full video here, as you guys can see. Go check this video out, because that video goes into some of the hidden costs that you might not be expecting. So I think it could be pretty helpful if you are looking to use those interest-free cards. Now, based on this slide, we can see the insane growth in Afterpay. The blue bar is obviously the active merchants, and as the amount of merchants have increased, active consumers has increased as well, just in line. So this has been quite attractive to Square. So on the consumer side, this has resulted in more spending from the customers, and then it's also resulted in repeat transactions as well. And on the merchant side, it's also resulted in increased conversion, brand loyalty, and more leads that those merchants have gotten through Afterpay's channels. So based on this, you can really see this vicious cycle and how it keeps on repeating to keep on grabbing more customers, more revenue for merchants, and so on and so on. And once again, just looking at Afterpay in complete isolation, it's had an incredible run with their revenue. As you guys can see, both revenue and gross merchant volume have been doubling every single year almost for the last 2 years. And the KGR, which is basically the compounded annual growth rate, has been increasing at a doubling rate, which is pretty impressive. And then lastly, just summarizing Afterpay as an overall business, we can see that it's expanded quite quickly from FY19 to FY21. And the main driver of that is expanding into new markets, right? So for FY19, majority of the revenue was from Australia and New Zealand, but as soon as they diversified, the chunk of the revenue from other markets started to grow quite exponentially. So we can see that North America was the biggest contributing factor to their overall GMV, which has made it quite a valuable company for Square to acquire. Speaking of which, let's talk about how Square and Afterpay can combine to create those synergies. Now, we're going to have a look at this from two parts. First from the merchant and secondly from the consumer. So let's start off from the merchant side of of things. Now, Square is basically looking to integrate Afterpay into its in-person checkout as well as online. So with online, as we can see, it's going to be integrated right here onto the merchant's website, and it also has a powered by Cash App comment here, and that's more from an online perspective. And from the in-person scenario, you've got the Afterpay symbol right here, and that's basically the Square terminal. So that's how customers can easily just use their Afterpay app to pay using the Square FPOS terminal. And I think this really summarizes how beneficial Afterpay is for Square, right? So if you look at just the amount of merchants that Afterpay has, it is 100k, but Square literally has millions of merchants around the world, right? So it's pretty insane the amount of growth that, you know, Afterpay can get if they just integrate into Square's offerings that already exist, and how much growth Afterpay can get after merging with this company. So looking at products as well, right now only buy now, pay later is offered, and if you merge that with Square's offerings of point of sale, managed payments, CRM, it's going to be quite a compelling offer for merchants to use and basically increase their revenues and conversions. Looking at the vertical side of things at the moment, Afterpay primarily operates in the retail space, but Square has a wide range and diverse range of verticals, which means that, you know, the more verticals there are, the more Afterpay can be integrated, and those companies can start to offer Afterpay's payment solutions to customers as well. Now, looking at the bottom at geographies, this is the one that I found pretty interesting, because as we can see, 50% of the GMV comes from outside the US for Afterpay, but for Square, 85% comes from within the US. So what this basically means is that Square benefits quite a lot because it's getting all that outside revenue to come in from other countries. And since people are already familiar with Afterpay, they're going to start to be more familiar with Square as well based on these payments. So it's quite a win-win situation. Now, looking at the consumer side of things from Cash App's perspective, customers can of course pay in full as they usually are used to. Afterpay can be easily integrated into Cash App, and this is going to drive repeat engagement, right? So basically, as you guys can see in the screenshot, when the customer presses continue with Afterpay, they're going to get taken to Cash App screen, and they can basically see a preview of buy now, pay later being added into Cash App. So once they actually download the Cash App, they can see that Afterpay is going to be integrated very, very nicely on the screen. It's very nice and easy to use. It's a very clean layout, and it tells you exactly when you need to make those payments. So integrating it is going to make people use Cash App more and more, and Afterpay as well. Now, inside the actual app of Cash App, we can see screenshots of actual merchants. So here we can see Urban Outfitters, which is quite a popular sort of brand in America. So, you know, I imagine that on this screen we can see more deals being added in that are personalized to actual customers. So if they like shopping for shoes, maybe the screen will show personalized recommendations for customers to keep on spending more. So this could be really customized based on the individual, I think. And of course, the ultimate goal of this would be to increase conversions, and that's how I think those could be increased. Now, doing a side-by-side comparison of Afterpay and Cash App, you can really see the insane difference, right? So the customers are only 16 million for Afterpay, and Cash App, you've got over 70 million customers just in the US. So that's pretty insane. And just think about the prospect that every single one of these 70 million customers are going to have the option to see Afterpay on their Cash App. So it's really going to drive their curiosity, and it's going to make those guys use Afterpay and try it out, especially because it's interest-free and it's 4 easy payments. So I think this is one of the factors that can really fast track the growth right here. And looking at the products, we can see that of course there's only buy now, pay later available for Afterpay, but looking at Cash App, they offer just a bunch of stuff like peer-to-peer lending, banking, stocks, Bitcoin, and even taxes, which is pretty insane. So adding buy now, pay later into this mix, I think is quite a good integration, and it just works really well. So summarizing this whole transaction, we can see that Afterpay is going to benefit both sides, right? So from the consumer side, you've got Cash App, and then from the merchant side, you have Square, and Afterpay is going to basically integrate these two entities even more. Now, I thought about this, right, and I think it's a pretty proud moment for Australian technology, especially Australian fintech. Afterpay hasn't even been around for 10 years right now. They've only been around for about 7 years, and they've grown very quickly into a company worth tens of billions of dollars, and finally getting to be acquired by a giant like Square. And this really speaks volumes as to what we can do by going global. So personally for me, I own Afterpay shares at the moment. I've invested on and off into the company from like 2018. And I bought the dip as well in March 2020. So the position of Afterpay at the moment is looking pretty good, especially from the Monday gain that we saw, which was today. So I can't really complain. And when those shares eventually get replaced by Square shares, I'm not going to mind that too much either, because Square is quite an amazing company that has quite an insane route to growth in the future as well. So let's see what happens with this acquisition, and hopefully it goes ahead. I don't know, let's see what happens. But let me know what you think of this acquisition. Did you expect it at all? Are you happy with the offer that they gave? It kind of sucks though, because the highest that Afterpay reached in terms of price was like 160, and this offer is literally like what, $35 below that sort of all-time high. So it kind of sucks from that aspect. But let me know what you think, because personally for me, this was super unexpected, especially for a Monday morning. And if you want to know more about fintech, especially Australian fintech, I've done a whole video talking about the top 5 hot fintech stocks right now. The link for that video should be right here. Check this video out. I've basically summarized what each of the company does and why should you care if you're looking to invest in the company, and basically their overall value proposition. So check this video out, and guys, thank you so much for watching. Please like and subscribe, and I'll see you in the next one. Bye now. And just think of